Mr. Melker, how are you?
I would love to see where you're getting this high sentiment because I feel like it's
It's
blood in the
supposed to be a
streets,
joke.
and
It's
well,
supposed to
I
be
know
funny.
obviously it's brutal out there. Obviously, it's dumping off as right now, but frankly, I'm really embracing this opportunity to buy a lot of cheap sats.
Absolutely. So I'm going to say what I think the sequence was from following you over the years, and you can tell me where I'm wrong. Because I think it's such a unique journey. You're a DJ, or you were a DJ,
It
and
was.
then covering crypto, and I don't. How would you say now? Like more macro kind of coverage, and obviously Bitcoin, or
Yeah, I think that that's accurate. So the trajectory was somewhat, I went to the University of Pennsylvania. Everybody went to Wall Street. It was the late '90s, so we were all trading and degenerates from day one. But I went on to pursue a career in music. As I was transitioning back out of that, I really found this market in 2016, and it was just, like finding a unicorn in a field. It was the perfect timing for trading, and I just fell in love with it from that perspective, and then sort of backed into being orange pilled. I think with time, the longer I was in the market, I truly understood what I was trading and what I was doing, and then was a lot less interested in trading it. So my initial content was basically me just posting trades on Twitter, and for some reason that was very engaging in the bull market when everybody's a genius. And then I sort of backed into the more interview based and news based coverage, and that's really where I've found, I think, what I'm the most interested in and would prefer to be focused on. And my opinion, as you and I have discussed privately, is that the direction the puck is moving right now is towards that mainstream adoption, but more specifically the institutionalization and government adoption, and really the average investor coming into our space and where those two meet. So I've really started to focus my content on the 40 somethings with large investment portfolios who are Bitcoin curious. And then, sort of convincing them to become a part of this, and then letting Bitcoin do what it does, which is send them further down the rabbit hole on their own.
would you say you were negative to neutral on kind of the treasury play, and where are you now? And maybe today's the perfect freaking day to ask you that question.
I would say that I was extremely skeptical, leaning far negative, not because structurally I think that it's wrong,
Mhm.
because like everything in this space, there seems to be an initial bubble and washout. And I've seen it so many times that just felt like the next iteration. I went to Bitcoin Vegas, and obviously that was when strategy had long existed, but Nakamoto was announced and 21 was announced. And I sat down with Jack Mallers there for an interview. And within 20 minutes of being on the floor of the conference, I was pitched at least 8 or 9 Bitcoin Treasury companies. And within the first 3 hours, probably 20 to 30. And my initial instinct was there's just no way that the market can support all of this immediately. Right. So I think that it's an incredible idea. I think it's the way that the market is moving. And I think there's some differentiation in my mind as to how companies and institutions should approach Bitcoin initially, and then what they can do once they've reached a meaningful level of adoption. I'm happy to discuss that if that's interesting.
Yeah, absolutely. I mean, it's almost like, could you say we're basically done with 1.0 and hopefully going into 2.0?
We're definitely going into 2.0. From day one, when I saw all of these, I pointed out that I think MicroStrategy has mastered the playbook. So I don't understand why you would buy financially engineered products from another Bitcoin treasury company when Saylor has done it so exceptionally well. So that left me asking, what are the rest of these going to do? And since Bitcoin doesn't naturally have any yield, you have to find a way to financially engineer that yield using Bitcoin. You can't use Bitcoin to make more Bitcoin. You have to do something, right? That's the beauty of Bitcoin. So my opinion from day one was do what Tesla did, do what Square did. Take cash flow from an existing business that's doing well and protect yourself against the debasement of your cash by buying Bitcoin. And slowly that Bitcoin stack will rise. And if you're patient enough, we all know what happens when Bitcoin is 5 or 10% of your portfolio. It becomes 50 or 60% of your portfolio, whether you intend it or not, as long as you don't sell and rebalance. So I think at that point, you've naturally accrued a massive stack of Bitcoin using actual cash and earnings from your business. And then you have endless options, right? So for me, it was just everybody kind of rushed to the finish line without running the race. And exactly what I assumed was going to happen did. And I'm certain I'm wrong about most things. So I'm not saying that I had any inside baseball, or that I'm not trying to like dunk or say that I was right. It's just when you have companies that raised a bunch of money and the expectation is to immediately deploy that capital into Bitcoin, what we ended up with was a bunch of companies effectively buying the top and then maybe helping set that top, right? And so what comes next? I think a lot of mergers and acquisitions. I think everything that trades at a discount is a great buy, right? Because who doesn't want a discount on Bitcoin? I wonder what that consolidation will look like. Um, I've bought some of them kind of down here at the lows, and I'm hopeful. And I guess we'll see what comes next. But it's interesting, Sailor always finds a way to buy the dip. Most of these companies bought, and they're just sitting here on the sidelines watching their balance go down with no ability to do anything about it. And even your average individual investor, you need to keep dry powder on the sidelines to, buy when slower and average down. I just don't think most of them have had that ability.
Yeah, it kind of surprised me, and I think Adrian Morris actually was probably the loudest voice on why would you just not save some capital to buy the dip, or leg in. I don't know, just be a little more thoughtful about it.
Because nobody thinks the dip is coming, right? At 126 or 120, the natural inclination is, well, we're obviously going to 135 or we're going to 150. I can't imagine how many of these companies started and their plan was to be trading, sub 90,000 on November 20th. And that probably wasn't in the cards for most of them, but anyone who's been here before rationally knows that a 30% retracement or 35 or wherever we land here, 40, 50, even if it's a bull market, that wouldn't be strange, but you have to survive. Right. And so if they're effectively taking on any sort of leverage, you take the risk of being liquidated, even if you're right directionally about where Bitcoin ends up heading, or losing your business or falling apart, or having, in the case of many, just having your investors run for the exits. I also think that, to the credit of many of these, they were trying an experiment, right? And if the market had gone up, I think it would be a very different experiment. But the whole structure of reverse mergers and having a pipe that gets announced, which pumps the stock, but the shares haven't actually registered, and you can't actually use that money to buy Bitcoin yet. It just created a really misaligned market that, like everything, and I hate to say it because my comparison when they were happening was like, this will probably end up like people who bought ICOs. And I know the people who are building these are deep Bitcoiners who hate ICOs and hate altcoins and hate that the misaligned incentives of those. But what ends up happening is that you would make an announcement, the stocks went up 20, 30, 50x, whatever the number was. Retail bought that hype and now is 95% down. Sometimes they were 80% down before the companies were even able to buy a cent of Bitcoin. Right. And so structurally, it was just, and listen, we couldn't have known until people tried. So I give them the credit for that. I just hope that in this 2.0 environment that you described, that people are a lot smarter. To be frank, we're not really seeing that many announced at this point anyways. So I'm wondering when that will see a major uptick.
Yeah. What's the favorite part of your day as far as the shows that you're doing, or anything on the horizon that you want to share?
The entire day. Absolutely love this stuff, man. I live for it, to be honest. I'm a wake up at 4:30 guy. I wake up at 4:30 in the morning. I write a newsletter. I feel like it keeps me accountable for the whole day. I love my 9 a.m. live shows, especially, my Macro Monday, which seems to be very popular with guys like us. And it just kind of just goes throughout the day, but I never get exhausted talking about this, thinking about this, taking meetings about it. It's just, to me, it's we're really on the cutting edge of something massive, and why wouldn't I spend my time doing that every single day? As far as what's coming next, well, because we've talked about it, and I'm trying to hopefully get Tim involved. I've built out an entire brand new studio. It's one small piece of hardware away from being completely launched. We've been running tests, but the idea for me is to kind of go all in on that idea we discussed before of that cross between sort of mainstream finance and Bitcoin, and dress up the content to make it familiar to the CNBC and Fox Business audiences. The people that we want to be buying Bitcoin, I feel like we need to go to them and not expect them to come to our YouTube channels and assume that they're going to engage with content of a guy standing in front of his bookshelf. right? So I've built basically a full news set with LED screens, and it'll look familiar to a Fox Business or CNBC watcher, and hopefully the content will mature with the asset class.
Awesome. What else?
I mean, I think everybody just wants to know where price is going, and nobody
Yeah,
can tell them, right? And I think this is one
yeah,
of those periods. To me, this feels like such a incredible buying opportunity, even if it goes much lower. And I want to remind people, because I have these debates with them all day. Yeah, it's $86,000. It's pretty painful if you've been buying all the way. Listen, I dollar cost average, so I bought
right.
125, I bought 90, I bought 5, right? And I will continue to. And I like the Sailor approach, which is if you get money, you buy Bitcoin, and you don't think about it too much. But if you believe that, I see people obsessing over where the bottom will be, right? Should I buy now? Should I buy at 75? Should I buy at 55? Should I buy at 35? Right? There's people who legitimately believe that's coming. 85 and 95 are the exact same to me if Bitcoin is what we believe it is, right? If Bitcoin goes to $1 million in a decade, 2 decades, whatever it is, I'm perfectly willing to be patient. And I don't think I'll look back and be like, damn, I only bought at 85 when I could have bought at 70.
Yeah.
So I just remind people is how important it is to just zoom out and take a deep breath and be patient, that whatever your portfolio shows on paper is not real, right? Because if you weren't planning to sell it anyways, why are you comparing it to what it was worth a month ago? Makes no difference. And really just, take the opportunity to buy Bitcoin while it's at a discount. We've got wildly oversold conditions if you're a technical analyst. We've got historically high fear or low fear on the fear and greed index. We've got people already talking about $10,000 Bitcoin. To me, we're starting to see all of the kind of same signals of fear and doom that we saw at 126 of euphoria and greed. So, I personally think we could be in the process of bottoming here, even if it goes lower. That will be much higher in the not so distant future, and we'll all be very, very happy with the buys we put in now.
What are you seeing, or what's your thought on how AI is intersecting with Bitcoin and everything else that's a theme here, whether it's miners, energy, infrastructure, etc.
I think that we're in a rare period where there's not enough infrastructure for what is needed, and that's going to be a huge boon for miners and those who are smart enough. I know you had Mike Alfred, my buddy, on this morning. Those who are smart enough to see the trend early that Bitcoin miners weren't just going to be Bitcoin miners, were brilliant and really ahead of the curve. And I think that's going to consistently be a tailwind for those companies who can just basically rebrand as AI data centers or data centers and switch on and off the miners and on and off the AI at any given time, depending on how they'll make more money. But we are woefully, underpowered for what is needed right now and what is coming. And so focusing on that infrastructural build out is probably an exceptional way to gain Bitcoin exposure. At the end of the day, I'm a guy who just wants to buy Bitcoin. Like, I take my bets on these other things. But I think that is the most natural marriage of Bitcoin and AI, is in the mining and infrastructure space. That said, if you dig beyond Bitcoin, there's a lot of interesting places that blockchain and AI are probably crossing over. But to me, that still feels exceptionally early, right? And even I think it was a year ago, a year and a half ago, there was already in the altcoin space this kind of speculative bubble where all the AI adjacent coins went crazy. It was a while ago now, because it was sort of when ChatGPT really gained steam and became popular, and that looked like every other very temporary narrative bubble that we've seen in crypto. I think the best way to approach these markets at this point is to wait for the first initial hype cycle, see what washes out, and then buy what looks strong at the bottom and who's continued to buy at the bear market. Like, I would be very interested in a treasury company that's still got dry powder and is consistently able to buy. I mean, Saylor bought almost $1 billion worth of Bitcoin last week, right?
Yeah.
It's unbelievable, right? That he can continue. And right when the skeptics were saying, oh, he's not buying much anymore, he's having trouble raising capital, he just quietly continues to do it. But, it reminds me of the late 90s and early 2000s. You had this massive bubble with the internet, and people always point out that was this huge washout and how terrible it was. But the biggest companies of the next 20 years were the ones who succeeded and rose out of that quote unquote bubble. Right. And I think that's a lesson that we see repeated over and over and over again, but accelerated in crypto markets. So just wait until the washout and choose the winner that's coming out of it. And I think that's probably the best way to play the cycles moving forward.
Hey Scott, I didn't know this about you before, but I used to be a vinyl guy until the whole stack got stolen. I thought about going and replaying it. Do you have a favorite there? Can you reach back and show us one?
I mean, there's
Just
so many. Well,
pull a random one. Let's
this
see
is
what we
kind of
got.
like hip hop. Okay, we pull random.
And we'll be right back.
Yeah.
Paul Simon, still crazy after all these years. That's what I pulled out randomly.
That's your random vinyl. Yeah.
Well, see, I've got it like this. The side over here is the random like classics, a lot of which were my parents, and then it goes through all the hip hop records I had. There was a point when I had 10,000 records in a small New York City apartment, and I literally slept on a bed that was propped up on records. But with marriage and children and technology, it's probably down to 1,000 now that have made the trip with me along the years. But yeah, I mean, I was a vinyl only DJ for the first 7-8 years of my DJ career. So
when was that? What time frame?
1998 to 2000. Well, 1997 to about 2017 was my DJ career.
So I was about 10 years before that. Yeah, I was DJing the occasional party. I was a radio DJ, but on a very, very small station in Colorado on like Saturday nights at 2 a.m. But I had all these Depeche Mode vinyls that were the marble Depeche Mode ones.
They're back there somewhere. Yep.
Oh man, don't tell me that. I'm gonna come and steal them. They're so hard to find.
Silence.
Yeah, they were just fantastic.
Yeah, I was a DJ on Penn WQHS at the University of Pennsylvania AM radio. Good times.
Is that where you're from, Pennsylvania?
No, I went to Penn in the late 90s. I'm from Florida, but I was in Philadelphia for about 8.5 years, and that's where I started DJing.
Fantastic. Well, great to have you on again.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated, client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. It's the strength of many, delivered through the simplicity of one. MIC is the foundation for everything OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now, OnRamp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible than ever. OnRamp. Strength in many, simplicity in one. Visit onrampbitcoin.com to learn more. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at the Win in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin Treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon.